You're listening to the Big Cast, your source for the latest in financial technology. Brought to you weekly by the Best Innovation Group, with your hosts, John Best and Glen Sarrashteh.
Welcome to another edition of the Big Cast. My name is Glen Sarrashteh on behalf of the Best Innovation Group, where we like to do cool things with financial technology. And today we've got our second batch of interviews from the recent Government Affairs Conference out in Washington, D.C. Three of them, Paul Fiore, from the founder of WealthNext, and a name that I bet several of you are already familiar with. He's been a constant presence and an important figure in the credit union industry for some time. Kian Sarrashteh, the founder of InvestiFi, who happened to win the Best of Show on the exhibit hall floor at the Government Affairs Conference. That was pleasant news, I'm sure, to Kian, but also to me, too, that came up after we had spoken. And Gareth Gaston, the newly appointed head of product for Candescent, a company that I'm sure you know, even if you don't know them by that name, the former NCR and NCR Voyix, the digital banking solution portion of that company, with some really interesting stuff going on there. So we'll be hearing from all three of those just in a few seconds. There is so much going on. So let's just start by taking a quick spin around things. First off, I just want to remind you, you can always find out more about the Best Innovation Group and the products that we offer, which presumably will just continue to becoming more and more relevant with everything going on. big-fintech.com. The big story, as you know, and we talked about this last week as well, is the tax status arguments around so many things in the country right now, but how it is specifically impacting credit unions and putting at risk our long-standing tax status about the way credit unions are treated as not-for-profit entities. We had a great conversation last week with the economics team of America's credit unions, Mike Schenk, Kurt Long, and the crew. We'll post a link so you can go back and hear part one for you. So our first batch of content from the Government Affairs Conference. But you can also see our blog on the topic that is out there, and I'll post a link to that. We also wound up getting pretty deeply into this, a little more than we expected, at last week's CU Town Hall. The phrase existential threat keeps coming up on this one. And John Best at the end of it kind of said, okay, well, the whole point of the CU Town Hall is to talk about the burning issues. And this one is about as burning as they come right now. So I think we might be putting an extra focus on that for some time in the future. So stay tuned, watch out for that. And now to add to the mix, just popping up over the last couple of days, the CDFI designation for community development financial institutions, of which credit unions play a disproportionate role, also now in challenges with regard to government funding. You'll find out more about that if you take a look at the show notes. Also, another way to keep tabs on these things, the CDFI thing just broke more recently, but the story around the tax status in particular is covered. We've launched, or actually reinvigorated, something we had done in the past called the Friday FinTech 5, where we post links to some of the most important and insightful articles we found from around the blogosphere, the media, the trade press, whatever you want to call it. We put that out every week through the Best Innovation Group. If you follow us on LinkedIn, you will find you'll be receiving that automatically as part of that. And also Bluesky. Again, we've talked about this before. We're looking to really invigorate the credit union community on Bluesky. We're posting those articles there as well. So give us a follow in either of those places, and you can stay in touch with those types of things. Let's get right on with our interviews. As I mentioned, Paul Fiore is a name you probably know. He was the founder of Digital Insight back in the day and has been involved with several initiatives since then, including CU Wallet. His new project is CU WealthNext, which kind of had its coming out party at GAC. And it's an interesting model focusing on the need and the clear gap in the marketplace for people providing, credit unions providing investment services to their members. Clearly a need out there. Let's have a listen and see what Paul has to say. Here with Paul Fiore. We've managed to move over to the hotel next door from GAC to find a quiet corner because it's pretty hectic over there. Paul, we talked last week on the town hall and discovered the new thing you've got going on with CU WealthNext. So I'm really happy to catch up with you here. And even since last week, there's new progress to talk about.
Yeah, thank you, Glenn. We're excited. We're a CUSO for credit unions, 100% owned by credit unions. Right now it's Michigan credit unions, including Frankenmuth, Zeal, and neighborhood mortgage solutions, and we've invested in some really exciting companies.
So just to kind of give a bit of background for people who are not familiar with Paul's name, Paul's the founder of Digital Insight, also was involved with CU Wallet, a couple of others, Double Beam I think you mentioned. So you've been down this path before, and you started talking about, I think very specifically, a pain point or a real need in the industry that you saw around wealth management, which is what leads you to this project. If you can maybe say a bit about that.
Yeah, sure. I was fortunate to be on the credit union side, also worked at a bank, worked at a core processing vendor that's owned by Fiserv, and then with Digital Insight, I got to see the need for a product from the credit union side. So if you just launch a new product, you could see that a bank down the street offers that product. Let's say it's a home equity loan or any new savings product, and you could offer it. In the case of investment services, it's very difficult for the credit union to offer self-directed investment services to their member. And the member has a choice. They don't have to go to a financial institution. There's eToro and Robinhood and Betterment.
All
and
the folks you
Coinbase.
see on TV now advertising like mad.
Exactly, including for legal services like Trust and Will, and there are vendors out there for almost any product, and that vendor, that fintech, wants your member relationship and they want to own it for themselves. So the question was, how can we build from within the credit union industry an entrepreneurial product set of services centered around one theme? And the theme we picked is wealth management, because the truth is credit unions are great at offering savings products and investment products, investment advice, financial literacy, services. It's a different animal. So how can we enable the credit unions to offer a full suite of services to their members that are competitive with everything out there, but capitalizes on the true advantage of credit unions, which is collaboration and
So you've taken a bit of a VC approach to this, right? Because you are identifying the best of breed. You're actually using some of your funds to get them to the next level and then making it more easier. It's a pick and choose matter. It's not like buy this entire suite of services. Credit unions can then take whichever of these that they want to implement for their member base?
Correct. It's closer to a private equity model where we are stewards of the credit union's capital that invest in the QSO. It's centered on a small segment and within one theme, like wealth tech. We then invest in companies like InvestiFi, concrete for fractional real estate. We announced yesterday at the show, investment in Legal Karma, invested in Pocket Nest, and they all have a theme around building services, products, and solutions for members that are on their wealth journey. Maybe it starts with something as simple as debt consolidation, establishing an emergency fund or saving for college or retirement, and it ends with maybe the member getting an inheritance and looking for more advanced financial planning and financial services. And we want to be able to offer either in partnership with what the credit union already offers, so if they have insurance relationships or relationships for will and trust or relationships for in-branch managed investment services, we could connect with that. But if they don't have investment services, we are curating and vetting companies and investing and joining the boards of those companies to help them distribute their product to credit unions.
And you've got, I think you mentioned, as a QSO, you've taken investments from 4 credit unions, I believe it is, so that's the money then.
Correct.
But you don't have to be an investor to actually avail yourself of these services, right?
Yeah, that's correct. So the early investors, they are board members, investors in the QSO, and other credit unions could join the QSO, or they don't have to join the QSO. And the goal, we provide discounted products across our portfolio companies for credit unions that are members of the QSO, but if you're not, all the services are available. And they are pick and choose. So a credit union could say, we don't want crypto, but we want fractional real estate, or vice versa, and each one is ad hoc.
Is there a platform kind of easy access approach that once you do one, it's easier to do more of them?
That's the
vision?
That's the vision. So today each product is, you can
So
contact the vendor, stand alone, and do separately, and then there's an integrated play. And what we're hoping to do is work with specific vendors, either in the digital banking front or in the course front, to be able to offer a package solution. So because the holistic approach, the all-in-one shop, is easier also for the vendor. So if you're a core vendor and you're looking to not have to walk at 20 booths at the show for 5 different companies in 4 different categories and then try to do integration, we could connect them all into one common integration.
I think, am I remembering correctly, that all of your early investors in the QSO are Michigan credit unions? Does that happen? Since I know Michigan's got a very forward-thinking, kind of reputation in the credit union space. I believe your co-founders from Michigan as well.
Josh Herman is the founder of CU WealthNext. It was called CU Digital One prior, and he was at Frankenmuth Credit Union. And Vicky Schmeitzer is a very innovative, forward-looking credit union CEO, and they started the QSO, and then Zeal Credit Union also joined. We just made an announcement of Julie being on the board, and then most recently the newest CUSO owner/board member is Neighborhood Mortgage Solutions and their division, Neighborhood Income Solutions, and it's Alpena area Credit Union and Team One Credit Union are the owners.
So a couple from within that. Okay. And so right now, I believe, at least the last time I looked at the website, I'm sure it's going to be updated on a regular basis. It was Frankenmuth Credit Union as well as InvestiFi were your first two partners, but I guess that's going to be exploding very quickly.
Yeah, so the first investment we made was in InvestiFi. It formerly was called CryptoFi, and they have a terrific solution for a robo-advisor offering as well as a crypto buy-sell hold offering as well as a stock investment offering for buy-sell. So pretty much anything you could get from an E-Trade plus a Coinbase with a robo-advisor component. Then the second investment we made was in Concrete for a fractional real estate platform. And the good news is each of these products are already available. So every one I mentioned there's a credit.
So you're not investing in folks who are still, MVP level. They've already got product in market.
Exactly. Concrete, for example, has been in market. They have 100,000 users on their platform. On the Apple Store, it's CONCREIT. The REIT is for Real Estate Investment Trust, so they're SEC registered investment product where you could buy fractional shares as little as $100 in a home, and you could go on the platform today. The benefit of going through the credit union is Concrete charges their customers $5 per month to access the platform.
That's a direct-to-consumer model.
Direct-to-consumer model, and we got Concrete to waive that $5 fee for anyone that comes in through a credit union. So if you could do it as simple as an affiliate link, and there's also a rev share for each of these components. So today, if your member withdraws money to put it in a fractional real estate platform or a stock investment platform, the credit will never see that money again and earns nothing. Every partner we bring has a revenue sharing component, whether it's a share of the trading fees, commissions, or asset under management fee, or in the case of our newest announcement, our partner we announced yesterday, Legal Karma investment with Legal Karma, credit unions could earn money selling legal services to their members, including wills, trust, and estate plans.
Like a pretty well-known name with those words in it that you see on TV.
Yeah, exactly. And some players are direct to consumer, some are through business development and through B2C or through B2B2C, and we wanted partners that really fully embrace that they're only going to market in the case of Legal Karma services through financial institutions and not go directly to consumer.
So the unifying theme, as I'm hearing, is these are services that we've got other non-financial institutions looking to own the relationship directly, and you're equipping the credit union to be able to offer them on a par with them and maintain that relationship as the first line of contact.
That's exactly right, and it's in coordination and partnership with their technology vendors so that it's a seamless solution for the member.
Perfect. So the best place for people, I'm assuming, cuwealthnext.com is the place to go?
Yeah, that's right, cuwealthnext.com, and Josh and I are here at GAC. We'd be delighted to show demos to anyone who's interested.
That's great. Paul Fiore, thanks so much for taking the time. Can't wait
pleasure.
to be seeing the next on CU Wealth Next.
Thanks, Glen.
Okay, and then a really interesting coincidence on this one. Kian Sarrashteh, he caught my eye. He was doing a brief pitch on the exhibit hall floor in one of the mini stages at the Government Affairs Conference that really caught my attention. And after I reached out and we set up time to talk, then I discovered that they actually had a CU Wealth Next connection, as Paul referred to. They were actually one of the first, I believe it was the first partnership that CU Wealth Next had struck. And Kian's name already had sounded familiar to me. InvestiFi was not something I immediately recognized, but as you'll soon find out, there's a reason behind my memory on that one as well. So let's have a listen to my conversation with Kian Sarrashteh of InvestiFi. Day 3 of America's Credit Unions GAC. I'm here with Kian Sarrashteh. He is the co-founder and CEO of InvestiFi. Kian, it's crazy times here. I know you've been nice and busy, and I first saw you a few years back. I guess it was at Finovate when your company was still called CryptoFi.
Yeah. It's been quite the journey. We started in 2021 as CryptoFi, which was our first product, and did our initial showcase at Finovate Fall in 22. And since then, it's been quite the journey. We've had the good fortune of being able to raise a decent sized round from a CUSO back in November of 23, and used a portion of that money to buy our broker dealer, stand up our own registered investment advisor, and then in February of 24, we rebranded to InvestiFi to reflect the full asset class experience that we offer to credit unions. So we embed crypto with stocks, with robo-advisory, all in a single UI that's embedded inside of online and mobile banking.
And the thing that really struck me is the value proposition that you talked about in your brief pitch here is the notion that if someone has a standalone brokerage account, money comes out of the credit union or whatever financial institution, sits there as a balance, is invested in stocks. If stocks are sold, it winds up sitting there as dry powder for the next round. And what you've done is basically turn the deposit account at the institution into the investment account.
Well, you said it better than I even say. Yeah, so that's exactly right. We did the hard work of integrating directly with cores. In our opinion, financial institutions have deposit accounts, so they may as well use them as investment accounts because Robinhood took that same strategy. It's my favorite data point. In 24, they did over $1 billion of interest income, which made up about 30% or 37% of their total revenue.
That was one of the things you mentioned that just absolutely caught my eye. If Robinhood is making not quite the majority, but a pretty damn high percentage of their profits based on the money that they're actually...
That's exactly right, because it's human behavior where you want to leave money in your investment account because if the price of Apple stock drops or Bitcoin drops, you want to have money in that investment account to pull the trigger on that buy order. And so people just leave money in their investment account, not earning much interest if it's on a third-party platform, and all the while that could be sitting at the credit union in that checking account.
So the key there is that you have invested in acquiring a broker-dealer. So as long as you can pull the money in from the cores that you're integrated with, then you can actually deploy the money on the behalf of...
That's exactly right. So when a buy order is executed, two things happen. We route that order immediately through to the broker-dealer for trade execution. And then in parallel, we're moving, let's say we do fractional investing. So let's say I bought $1 worth of Apple stock. I would move $1 from my checking account over to the credit union's GL, and then we'll settle those trades at market close.
Okay. So you had mentioned this obviously really catalyzed your adoption, or maybe it's just the matter that you've been doing the hard groundwork before, but how long it took you to get the first few clients up on crypto, but now that you've got this broker-dealer capability, and not everyone has to offer the full suite of services.
That's correct. We built the whole solution out in a modular way, and I think the new administration is encouraging for credit unions to be able to consider offering crypto, but if your board's not going to allow it, we can just launch our stocks and ETFs and robo-advisory products. And when we did so we launched in September of last year, so it's been about 6 months. Took us 4 years to launch with our first 4 credit unions with just crypto, but once we've layered on securities in the last 6 months, really the last 2 months, we've actually signed up 5 credit unions already this year.
Wow.
And so we're contracting with 3 more, and it's starting to make a lot more progress now that we can do this with securities as well.
And you mentioned also the robo notion. So it's if people want to be their own independent investors, they can do that, but you've got a guided advisory module as well?
Yeah, we call it guided investing. It's our robo advisory product, and it's a great way for members to be able to invest passively and have their risk managed for them by a financial advisor and not have a direct human relationship. And one of the things we do too, because a lot of credit unions have wealth management where they have advisors that sit in-house, is we have a portal where the advisors can prospect from the digital investors. A lot of advisors have minimums, right? You might have to have 25K to start a relationship with them. And so once a member hits 25K of digital investments with us, we can notify that advisor, they can reach out to start a relationship.
And you mentioned, again, doing the hard work of integration. I think you said you've got 5 platforms that you're now live on?
Credit Union's live on 5 platforms right now. We're building out 3 more. And I know we have more digital banking integrations and core integrations built than any other digital investing company in the U.S.
The other one that really caught my ear, you hit profitability already in 2024, you said.
We did.
I'm amazed by that.
We did, yeah. We're had the good fortune of doing about $17.5 million in revenue last year. $7 million of that was free cash flow, and we're reinvesting back into our business in a big way this year. And all we do today is work with credit unions. We will be working with some banks too, but the whole solution was designed specifically for FIs that have digital banking providers like the ones that we integrate.
And you did say you are structured as a QSO, correct?
We are QSO, yep.
And speaking of which, I spoke to Paul Fiore at CU WealthNext yesterday. He mentioned you were the first investment that they made. So can you say a bit, how did that relationship come to be?
Yeah, so one of our early clients was Frankenmuth Credit Union, which is the founding credit union of CU WealthNext. And they were interested in investing. And when they did so, they had the vision to really build out this entire wealth ecosystem.
They the credit union.
The Frankenmuth, and I think in combination with CU WealthNext.
Gotcha.
I wasn't privy to all of those conversations, but I think what I've observed them build out is really elegant because I think they invested in us first because a digital investing platform is sort of like the foundational layer if you're going to be having digital wealth inside of the credit union, right? But there's other complementary companies that they've also invested in now, which are adding value to InvestiFi. So they've invested in Pocket Nest, which is financial wellness. Legal Karma, which does like trust and wills.
I've seen them at the show here.
Concrete, which is complementary because they do fractional real estate investing.
And again, the one that I think Paul mentioned to me, Concrete, REIT,
yeah, exactly.
in Real Estate Investment Trust.
Right.
Clever naming.
Exactly. So, having the collaboration with these other wealth tech focused firms, I think has been beneficial because, wealth is more than just investing. And I think what they're doing at CU WealthNext to aggregate all these different portfolio companies into sort of like a unified solution is a pretty elegant way for credit unions to get a turnkey, best-in-class wealth product from soup to nuts out of the box.
And you were already in production, or at least signed, committed with Frankenmuth when this whole thing happened?
We were, yeah. I think we launched with them. It was really right around the same time that we closed on the investment. So those conversations were happening in parallel. I think we launched with Frankenmuth in October, November of 23, and then the investment closed towards the end of November of 23. So
great story and great proof of concept. So if people want to find out more, InvestiFi, best way to and get InvestiFi.
Invest, yes, InvestiFi.co.com. A lot of people.
.co.
Yes,
it's a good catch.
Yep.
All right. Kian Sarrashteh.
Nailed it.
Yeah, there we go. Co-founder, CEO of InvestiFi. Thanks for taking the time.
Thanks for having me.
And after the Government Affairs Conference, I learned that I wasn't the only one that was impressed by what InvestiFi had to offer. I discovered that they were awarded the Best in Show based on a judging that took place on the exhibit hall floor, which was a competition I wasn't even aware was going on. Apparently, any of the exhibitors were able to pretty much put their hat in the ring to be judged by a group that went around, took a look at demos, asked some questions. I guess there were about 30 or 40 of them, as I understand, that actually took them up on their offer. And InvestiFi actually came away with the Best of Show on that one. So congratulations to Kian and crew on that. Some really good names that we've seen more of after the fact have won the Best in Show in the past at GAC, I learned. Glen, who are also a serial winner of the Finovate Best of Show Awards, won back in 2019. In the last 2 years, it's been Neural Payments, who's made some great traction, and Equipify, two other companies that I think you've probably heard from before. I mentioned earlier that Paul Fiore's company, CU WealthNext, kind of had a coming out party at GAC. I think you could say the same thing about Candescent. New name for the company, certainly not but far from being a new company, but the name's been around since late 2024, but their booth was brand new with the branding. As I mentioned before, NCR is the original home base, and then NCR Voyix when NCR broke into two. And then the digital banking piece wound up being carved out and sold to private equity and rebranded as Candescent. And now there's another owner in the mix, or actually a couple of owners in the mix on that one. Gareth Gaston recently joined as the chief product officer and has a great tale to tell and some really interesting experience to bring to the mix. Let's let him tell the rest of the story here from a remote hallway someplace at the Government Affairs Conference. I'm here with Gareth Gaston, the Chief Product Officer of Candescent. And Candescent has debuted your new booth here at GAC. I understand this is the first show that you've actually used this one with the new branding, correct?
Yes, hi Glenn, thanks for having me. It's great to be here. This is, of course, we're a very recent carve-out. We used to be part of NCR Voyix, and now we're our own independent company, owned by Veritas Capital and Canopy Ventures.
That's another piece I want to talk about, because we've already spoken about the original break of NCR into the two companies.
That's right.
Then Voyix wound up breaking, selling off this piece into private equity. And now I was not aware until just this last week that Canopy Ventures has a piece, which I think is an interesting story. Yeah. And they've got you too. You're new as well.
I'm new
right?
too. I'm 9 weeks in, exactly. So I think the theme that you're hearing here is new, right? Yeah. So this is so we've got the benefit of being the company that kind of invented the category of digital banking all these years ago, but then having this great new refreshed approach to everything we're doing. So we have new ownership. We're a standalone company. We've got quite a few new leaders coming in.
No pressure of quarterly earnings for a while.
That's it. That's right. And I guess what comes with that is we're able to focus on really making this company a great company that will be delivering great experiences for our financial institutions to give to their clients.
And my recollection is it's about 1,300 financial institutions?
That's correct. 1,300 financial institutions and about 29 million end users of all of the various digital tools that we have.
And that runs the gamut, both in the, mainly in the U.S., or entirely in the U.S.?
Yes, not entirely. We do have some products outside the U.S., but primarily the U.S. The digital banking side is is the US.
And banks and credit unions, and primarily on the community side. I don't know how big, but the largest you go up the league table.
So we'll go up to somewhere around about 150 to 200 billion in asset size. And yeah, so we have a range of products actually, which is probably worth just mentioning. So, as we think about digital and digital plus human, so we think about digital banking, account opening, and that's where we begin to get into digital plus human as well. So that account opening solution can also be used by branches and contact centers as well. And then we have a branch solution for tellers, and we also have a solution for interactive for ATMs and things like that too.
So again, ATM, which I think of as being, it gets a little bit confusing because that was the Atleos side of the business.
So we don't do the hardware. Okay. So we do we do the software. So we do, and the software specifically that we do is actually some of the value added things. So we don't run the ATM software. We provide some of that value added interactions that you get.
So you do have some joint clients.
We definitely do. Yeah, we absolutely do. Yeah, we absolutely do.
So you, again, as we said, you're new to the organization as well, and I believe you've had about a 10-year career recently at U.S. Bank.
That's correct.
What was it about this opportunity that kind of spoke to you? I'm curious what brought you here.
So I spent nearly 11 years at U.S. Bank and was such a tremendous journey. I really enjoyed helping our clients there. And my role at U.S. Bank initially for the first 5 or 6 years was to run digital banking, and actually the role was called omnichannel. Kind of invented the term for omnichannel in banking at U.S. Bank, and then in the last 5 years kind of create enterprise digital platforms. And really as I looked at the opportunity here and I looked at the success and the innovation that we'd had at US Bank, it seemed like a great fit for the exact ambitions that Candescent are looking to have as well. So we're looking to be the industry leader, we're looking to innovate and provide a tremendous experience and help our financial institution clients grow. And we're also looking to connect all of those digital plus human tools that we have into a seamless experience. So everything that I was helping US Bank do, I'm excited to have the opportunity to help hundreds of 1,300 financial institutions do. Exactly.
Presumably more as time goes on. Then going back even further on your resume, I noticed you actually came from the hotel business. I did. Online booking.
That's right. I spent. What's the connection there?
Yeah, I'm curious to hear if there's things about it that you see commonalities. What brings what you bring to the table from that
definitely.
Experience.
So I was very lucky that there's a gentleman called Kent Stone who was the vice chair of consumer and business banking for US Bank, and he wanted to get somebody from outside of the banking industry who had seen the digital disruption before. So very grateful that he took a bet to bring somebody in from another industry. And really that was the story. Was the travel industry had already been through mass digital disruption and was actually beginning to kind of mature by that point. So going back to kind of 2014, and then so coming into US Bank with that knowledge of digital transformation, and then translating that into how do customers want to interact with banks. And I think first of all, I think the e-commerce side of travel plays out very well in financial services, because at the end of the day, I'm sure everybody who's listening wants to figure out how to grow better and grow using digital tools. And so the e-commerce side, which is very mature in travel, was very helpful coming into banking. But then, of course, banking is a lot about service as well. So just those everyday interactions for helping customers self-serve. So that was another great part of the journey as well.
Yeah, I'm just thinking it's not quite a perfect analogy, but the same way the hotel business and travel business matured first, I would say the largest banks like US Bank started to mature, but now most of the clients that you're serving, for the great extent, when you're talking 1,300, you've got to go to a much smaller group that probably is not as mature in terms of that self-service and that online experience. So you've got that same curve to ride again.
That's right. I mean, that's the exciting part of this is I very much look forward to partnering and helping all of those financial institutions go on their digital journey and to provide that same great experience that the big guys have done. Yeah, absolutely.
So Veritas Capital, the primary buyer of Candescent, your current investor, but Canopy Ventures, which is a name which I found very interesting and did not hear that until recently, but they're also in the mix.
Yes.
Anything you can say about what they bring to the table?
Yeah, well, I think on a couple of those, if I'll start with Veritas, so very excited about Veritas because I think what they do well, they do a lot of things well, but the two things that always stand out for me about Veritas is, first of all, they are used to investing in critical infrastructure type companies. So think about healthcare, defense, and their finance. And so they understand regulated environments and they understand, investing for the long term. The second thing is they actually are experts in doing carve-outs like we're doing from NCR right now. So exceptionally helpful that they have a playbook for that, so we can get through that process as quickly as possible, so we can remain focused on our clients. So that's I think two really exciting things about Veritas. And then Canopy is fantastic because Canopy, of course, gets its money from the financial institutions, and so they invest on behalf of financial institutions. So it's an incredible endorsement, part one, to be invested in by Canopy. And secondly, they've got a wonderful ecosystem of fintechs that it's a privilege to be part of. And we really look forward to forging great partnerships with their wider portfolio as well.
I have to admit, I know a lot more about Canopy than I do about Veritas for exactly that reason, and I think of that as quite a seal of approval.
Yeah,
so that makes sense.
Yeah, no, we're very privileged to be part of that.
So I guess you've kind of covered this already, but given, and what, Candescent just became its own independent company now, was it November?
October,
yeah. So it's very new, and obviously even, it's still a work in progress.
Hence the shiny new stand.
Exactly. What is it about, both the old, and or the new that you'd like make sure that you dispel any misconceptions? What would you want people to know and take away about Candescent?
Yeah, well, I think first of all, I think we were, as I said, the category inventor, if you like. So we've got that rich heritage of really understanding digital banking and all the digital plus human things that we do. So we've also invented the category of kind of what it takes to do branch banking well, and combining that with digital. So I think that's a great thing. As we think about kind of the renewed focus that we have, our goal is to be the industry leader in our space, and we've got a whole raft of initiatives that we're rolling out this year that we're really excited about, whether that's our new user experience or lots of other new tools we're becoming even more extensible, even more easy to integrate with, and we're going to have a much more expanded set of partnerships with fintechs that we're looking forward to bringing to our financial institutions. So there's lots of exciting things coming, and really, with a new horizon, and also with all the stuff we're planning this year, really that's just the beginning. So this is an exciting time for us, and we're looking forward to continued innovation to help our financial services clients, all these credit unions, to compete and provide the best customer experience and to grow.
So I'm just thinking, new name, I guess I'd say new company, but not a new business. So I think that's really the key. You've got,
that's right.
That's right. You say you're already a 1,300 client strong business.
That's right. And as I say, it's it's really about with a really intentional focus on being the best we can be in the industry.
And I guess the best way to follow along is Candescent.com, right?
That's correct. Yeah.
Gareth, Gaston, thanks so much for taking the time.
Thank you very much, Glen. Great to be here.
And with that, I think we've got a wrap from the Government Affairs Conference. 2 weeks worth of, I think, very valuable conversations and interviews. I hope you agree with that. As I said, I'll post a note to in our show notes. I'll post links to the conversation we had with the chief, the economics team from America's Credit Unions last week, as well as links to all of these companies: CU WealthNext, Candescent, and InvestiFi, as well as some of the other interesting stuff that's been going on in the space. We like to try to keep the conversation going as best as we possibly can, and we love to hear from you. Please drop your notes and share your thoughts. You can find me via my firm, 154 Advisors, and Glen Sarrashteh is my name. You'll find me on LinkedIn or Bluesky. You'll find the Best Innovation Group at those places as well, or our Grand Poobah, John Best, via JB FinTech. I mentioned before the town hall. There will be another episode of that coming up on Wednesday, March 26th. It's free to join. Those are on Wednesday afternoons at 3 p.m. Eastern, noon Pacific. You do need to register in advance and receive a link to join us, however. It's been a great growing group and a lively conversation the last couple of weeks, and I see no reason to think that won't be continuing over the next few. Speaking of the next few, we've got the next couple of interviews already lined up already. We've been trying to keep them in as real time as possible because the news has been breaking so fast and furious. There's no reason to put them in the queue for too long. So I've got a few more set up. I think you'll be interested in what these folks have to say. Check in for new content every Tuesday here on the Best Innovation Group's Bigcast. You can find us, again, at the website, big-fintech.com, at the Media tab, and you'll find all the past episodes there as well. You can also find us on Spotify, Amazon Music, Apple Music, etc., wherever you find your podcasts. Feel free, and please do subscribe, like, whatever it takes to get the reminder that the new episode is out. We'll be following along. We'll be watching for you in the marketplace, and thanks as always for listening.
Check back each week for the latest from the Big Cast. Or better yet, we hope you'll consider subscribing for free via Spotify, Stitcher, Apple, or wherever you get your podcasts. If you have questions or comments, we'd love to hear from you. Tweet us at Big FinTech, email info@big-fintech.com, or visit us at big-fintech.com and click on the Media tab, where you can post a comment or check out our archive of hundreds of past episodes. See you next week.